Hello, fellow Rebel Capitalists. Hope you're well. Big update. The Dow is down almost 1,000 points right now. And it's most likely due to the fact that interest rates went up by 50% or by 50 basis points yesterday. But even more importantly, the Fed said their target interest rate is now over 5%. Let's go right to CNBC and check out what's happening on the Dow. And we'll do a refresh quickly. And obviously, this is a moving target, now down 936 points. And I think what's even bigger news is the fact that the 10-year Treasury is plummeting in yield as we speak. Right now, down to 3.43%. I think that's down about 7 or 8 basis points just today. And keep in mind, this is one day after the Fed increased interest rates by 50 basis points and started and continued their hawkish talk, moving up their projected interest rate to 5.1%. So let's see what's happening in the oil markets. Oil markets down to 76 or 77 a barrel. Gold is down on the news, and so is cryptocurrency, which is really wild because usually, even with gold, it would catch a bid, or it was catching a bid, when the probability of rate hikes decreased. Now we're seeing the Bitcoin and gold trade down with the stock market and definitely the NASDAQ, that's for sure, for the opposite reason that instead of going down because it saw further rate hikes or the Fed staying higher longer, now when the market is calling their bluff, these prices are coming down, gold, crypto, and NASDAQ, S&P, because even though they think the Fed is going to decrease rates maybe sooner than later, they're waking up to the fact that this means the economy is very, very unhealthy. Going right back to the video. And the reason I'm saying this, that this is the way the market is digesting the news, is because the 10-year Treasury. If the 10-year Treasury was going up, it would be a little bit different. But now that we know that it's going down, we know that the market is calling the Fed's bluff. Josh, what input do you have here? What are your thoughts on this price action?
I'm not too surprised. Just look at what's happening with the yield curve, what you've been talking about for the past few weeks or for a long time. And then just look at right now, I just pulled up reverse repo, which is now yielding 4.3%. And then the 1 month, which is still at 3.8%. That's a 50 basis point spread.
Yeah, that's exactly what we were talking about yesterday. But it's just unbelievable that what was it? A few days ago, didn't the market go way up when we got the news that the CPI surprised to the downside? So the market's, yay, inflation's done. We don't have to worry about it anymore. And today they get out of bed and wake up and like, oh my gosh, inflation is coming down. That means that there's a recession. The bond market's right. Pants on fire, or whatever the meme is. Let's go back. In fact, I'm curious. When the CPI number came out on Tuesday, didn't it?
On Tuesday, I believe, yes.
Yeah, so if we go back, come on, chart. So my guess is that was the 12th. Let's see, today is the...
Yeah, it was the 12th.
That was the 15th. So yesterday, 14th. Are you sure it wasn't the 13th?
Oh yeah, no. But I know pre-market during the CPI, before the CPI, it just ripped.
Right here. You can see it. It just skyrockets. Yeah, inflation's down. Woohoo, disinflation. the Fed's doing their job, soft landing, the Fed's going to lower interest rate, the market's going to rip, the bear market's over, and then wow, coming straight down. And we get the Fed decision, only 50 basis points, and then it goes up slightly, and then the market digests what all the other economic news, and they're like, wait a minute here. Yes, the Fed might pivot, but we're looking at everything else, and then it starts to really crash. And then they combine that with the fact that, oh my gosh, the Fed's talking about 5.1%, and then it goes down even further, and we get this little mini crash that we had today. And again, I would assume that maybe the majority of this down move was a result of the Fed announcing that they're going to go or try to get up to 5%. But I'm hesitant to say that because of the down move in the 10-year Treasury. If the 10-year Treasury went up, then I would assume that this down move would be almost entirely a result of that hawkish Fed talk. But that's why I'm saying that I think there's something more to this. In my base case is that this is the market waking up to the fact that a recession or economic depression is really, really, really bad for stocks, even if interest rates are low. All right, guys, there you have it. Wanted to give you that quick update on the stock market because I think that's very big news, especially on the coattails, or especially just after the Fed comes out and announces the rate hikes and their stance for the future rate hikes in 2023, just yesterday. So as always, enjoy the rest of your afternoon. Make sure that you're standing up for freedom, liberty, free market capitalism. We'll see you in the next video.